We continue to look at some of the stocks on the move, and we'll start here with Jenny Horne, host of Next Gen Investing, looking at Abercrombie and Fitch really jumping despite cutting profits.
Yeah, I mean, it's amazing, frankly, Nicole, to see this name moving as substantially higher as it is pre-market this morning. I mean, we're up 26%, heading for its best day in nearly 2 years after a quarterly earnings beat and a big jump in Hollister sales, as well as an improved outlook for sales. However, like you said, it wasn't all rosy now going forward. We see, though, the shares gaining back after seeing substantial losses on the year. A pretty big jump in sales from Hollister is leading a lot of the enthusiasm as it's more affordable and also more teen focused. So expected, or came in better than expected for the quarter. Also, we saw them nudge up their full year sales outlook, but lowered that profit outlook, suggesting they will eat some of the cost of tariffs. So Abercrombie's first quarter net income did contract over 29% from a year ago, while earnings per share did also beat the expectations at around $1.59 versus the $1.36 per share estimate. Net sales rose 8% to a record level for the quarter of $1.1 billion. That did also just narrowly beat. Hollister brand sales again surged 22%, while Abercrombie sales actually declined about 4%. Now, for the full year, they expect net sales to decline between 3 and 6%. Prior guidance has actually been around 3 to 5% growth, but earnings outlook was trimmed ever so slightly to $9.50 to $10.50 from the range of around $10.40 to around $11.40 a share. They also did say this includes the estimated impact of the current 30% tariffs from China and a 10% impact on other imports. So I think that this is huge. This is one of the first retailers that came out and said, hey, we have right now a tariff problem. We're going to see this hit our first quarter and hit our fiscal year. And now it seems like perhaps even their own sentiment was a bit more downbeat than was necessary, because this was definitely a result that surprised the street, I think, based on this morning's move to the upside, Nicole.
Yeah, understood. I mean, you mentioned Hollister, all of these names. I mean, some people love and some people don't. And that's really the story within. We're going to be talking to Jerome Martise later about all these retailers, but you've really seen the sort of push and pull in the retail world.
You have, and you've seen the very clear, it feels like the moves have been stark in either direction. Either you're able to commit to your guidance, you're able to eat some of the cost of tariffs, or you're able to commit to at least keeping your prices relatively stable. And that seems to be the winning recipe right now. It also helps, though, with Abercrombie and Fitch's sake, that we're down 50% on the year. I mean, this has been unprecedented. If you followed the stock for the last 3 years, it's been a high flyer in retail until some of the turbulence in the overall market, as well as the tariff impact. So nice to see at least a pop, hopefully eating back some of the losses on this year. But this was a name that was much closer to its 52-week lows than its highs going into this print.
Yeah, understood. What about Okta? We're seeing those shares this morning under, I think, a little bit of pressure.
We are seeing some pressure here. And so we're seeing some pressure in regards to its first quarter earnings, as this was a bit of a different picture in terms of what the street had been expecting. We also saw the company saying it's now factoring in some of these potential risks related to the uncertainty of the economic environment for the remainder of their fiscal year of 2026. We're also seeing a ton of analysts right now really update their price targets, mostly to the downside. I've seen RBC trimming its price target, Deutsche Bank as well. But mind you, a lot of these analysts, what we can see is that regardless of some of these maybe updated price targets slightly to the downside, there's a lot of still conviction to the buy side here. And so Okta did still have a pretty solid start to this year. We saw record operating profit as well as another quarter of some pretty robust free cash flow. However, the world's biggest organizations of really securities, what they call themselves, they continue to identify these various security solutions, saying that they're not only becoming a more efficient but a smarter company that is helping modernize and unify their customers. So they had some positive commentary to say. They do expect now their full year revenue to be in the range between around 2.85 and 2.86 billion. Also expects their full year adjusted earnings to range between around 323 and around 328 a share. So a modest pop this morning. Again, some lowered expectations across the board, but doesn't seem to matter here, as right now, overall, it seems like this was, again, a hurdle that was better than feared as far as the at least price activity so far this morning.
Yeah, and it'll be interesting, as they factor in some of the potential risks that are related to the current macro environment. Everybody wants to hear from NVIDIA later, right? Because what will they say? What kind of spending are we going to see from all of these companies? A final quick thought.
I have to say that I think cybersecurity is always a great read on like the appetite for AI, because if you're willing to boost your cybersecurity offerings, it means you're on board with the whole notion, the whole narrative that basically, yes, AI is going to need increased cybersecurity as with any new technology. So I see this story going pretty hand in hand with then the strength that hopefully we hear from NVIDIA later today, but also I think encouraging that so many of these cybersecurity companies have been able to outperform expectations. And for the case of Okta, I mean, this name is actually sitting, again, much closer to its 52-week highs than lows, and to say adversely to Abercrombie and Fitch, as we're only off of these highs by about 1.6%, and we're off of lows for the year by almost 78%.
All right, Jenny Horne, great to see you. Thank you so much.